Hello traders and welcome back. In today's video, we are going to analyze the latest macroeconomic fundamental factors that could cause sharp price movements in the next 24 hours. Our focus will be on the release of the US ISM Manufacturing PMI data, which could impact the euro-dollar exchange rate. We will also look at other important releases such as Germany's factory orders and market manufacturing PMI data for both Germany and the US. So if you're interested in making profits from the 5 to 6% move that we've seen in the last 2 weeks, make sure to watch this video until the end. In the first part of the video, we'll analyze the latest technical price action for clues about what might happen next. Then, we'll go into the macroeconomic calendar and see what key events can move the price in the upcoming period. The time of recording, Euro USD is trading at around 1.5153. In the last 24 hours, it has been moving within a very tight range between 1.1549 and 1.1568. This lack of volatility shows how the market is currently unsure of what to do next after the sharp drop in the last few days. If we zoom out a little bit more on the hourly time frame, we can clearly see that yesterday the pair had a big red candle with a sharp decline in price, ending the day at 115.49. Today so far, we have seen only a slight movement up to 115.68, and now the pair is slowly moving down again. So, in the coming hours, there are two possibilities for the price action. Either we are going to see another push down towards 1.1540, or the market is going to break above 1.1550 and continue going up. If the breakout happens, the next resistance level would be 1.1570, where we also have the 50 simple moving average on the hourly chart. But if the price goes down, then the next support level would be 1.1540. Now let's go to the macroeconomic calendar and find out which of these two scenarios is more likely to happen. When looking at the macroeconomic calendar, there are three releases that stand out. The first one is Germany's factory orders data for January, which was published earlier today. Analysts expected an increase of 0.5% month over month, but in fact, the increase was way higher than expected at 1.7%. This is good news for the Eurozone's largest economy, and it shows that the manufacturing sector is recovering well from the pandemic shock. However, the positive effect on the euro-dollar exchange rate is already priced in. You can see that in the last few days, the pair had a sharp decline right after this data was released. The second release is the market manufacturing PMI data for Germany, which was published earlier today as well. It came in at 54.7 in February, which is better than the 53.8 reading in January. Anything above 50 indicates expansion in the manufacturing sector. So this is yet another piece of good news for the German economy. However, just like the factory orders data, this information is already priced in. Once again, we can see that on the euro-dollar chart, where you can see that the decline started before this data was published. This brings us to the third event on the calendar, which is the US ISM Manufacturing PMI data. It will be released later today at 15:00 GMT. The market expects a value of 60.5, which would be much higher than the January reading of 58.7. If the actual value beats the market expectations, then we can expect some upward pressure on the USD, and the euro-dollar pair could drop towards 1.1540. However, if the actual value disappoints and comes in below 60.5, then we could see some upward pressure on the euro-dollar exchange rate. But wait a minute. Shouldn't we be expecting the exact opposite? Shouldn't the worse the US data is, the weaker the dollar should become? Well, yes, that's true. However, the market usually reacts to data releases by pricing in future expectations. For example, if the ISM Manufacturing PMI comes in at 61 instead of 60.5, the market will start pricing in the chance of the Federal Reserve raising interest rates sooner rather than later, because strong economic data increases the likelihood of the central bank taking action. That would cause the dollar to strengthen against all G10 currencies, including the euro. We can see this effect on the US dollar index chart, where we have marked the time of the January ISM Manufacturing PMI release with a blue rectangle. As you can see, the index jumped up after the data was released, even though the actual value was lower than the market expectations. The same thing happened with the German PMI data release. The index jumped up even though the actual value was higher than expected. This is why it is always important to look at the market's expectations before the data releases, and not just at the historical data when analyzing the impact of macroeconomic news on the price of a financial instrument. Looking at the market expectations from a contrarian point of view, a better-than-expected ISM manufacturing PMI could put downward pressure on the euro-dollar exchange rate in the short term. But if we take a look at the euro-dollar chart, we can see that the selling pressure is starting to ease off. The large red candle that we saw yesterday is a sign that the sellers are losing interest in the pair. Also, the tight price action in the last 24 hours shows us that the market is unsure of what to do next. All of this suggests that the probability of a further drop in the euro-dollar exchange rate after the ISM release is low, especially since the next support level at 1.1540 is relatively close. The 1.1540 level is also an important level because it is the 20 simple moving average on the daily chart. Whenever you have a downtrend and the price ends up touching the 20 SMA, it often ends up bouncing back. So if the ISM data beats market expectations, we could see a slight drop towards 1.1540, but it is unlikely that this level is going to be broken. On the other hand, if the ISM data disappoints and comes in below market expectations, then we could see a sharp jump in the euro-dollar exchange rate towards 1.1570, where we have the 50 simple moving average on the daily chart. And once it breaks above that level, the next resistance would be 1.1600. Of course, nothing in life is certain, so don't forget to set a stop loss if you decide to trade this pattern. Now I want to hear from you. Do you think the euro-dollar exchange rate will go up or down after the ISM release? Leave your thoughts in the comments below. If you enjoyed this video, you will most definitely enjoy the one on the screen, because in that video I analyzed the Bank of England's latest monetary policy meeting. In that video, I went through the main points of the meeting and explained why the British pound rose sharply right after the announcement. So if you haven't seen it yet, make sure to check it out. And if you enjoyed that video, make sure to leave a like down below and subscribe if you haven't done so yet. Thank you for watching, and I'll see you in the next one.